Hello, ladies and gentlemen, Greg Mikulowski from ForexLive.com. This is a Kickstart video for January 30th, where I take a look at three of the major currency pairs, including the euro versus US dollar, the dollar versus yen, the sterling versus US dollar. So let's get started. We'll start off with the euro versus US dollar. I'm looking at the 4-hour chart, and the Monday's trade started at this dash line right here, and you can see when the market moved down, and then we moved back to the upside. That moved to the upside, came right back up to test the 200-day moving average. That's a green line in this chart. The level comes in at 1.08413. In trading here today, the price initially moved back to the downside, and then found support against in this swing area. Recall from yesterday, the swing area was broken between 1.0803 up to 1.0824, but we found support right at the 50% midpoint of the move up from the low price route going back to here, which is the October low to the December high. That level came in at 0.7936. I think the low came in at 9.5 before the market started to rotate back to the upside, reaching that 200-day moving average. Currently, at the moment, the price is trying to, or tried once again to get above the 200-day moving average. We are currently trading below that level at 1.0836. That 200-day moving average will be a barometer for more bullish or more bearish. The buyers gave it a shot above that level. If I go to the hourly chart, take a look at the current hourly bar, the couple hourly bars here. You can see how the price moved above that level, but the falling 100-hour moving average seems to be a overhead resistance target at 1.08527. At least for now. Last week, that 100-hour moving average didn't quite do its job, nor the 200-hour moving average. You can see the price moved above it here, moved above it here, moved above it here, and even moved above it here. And each of those moves above the 100 and 200-hour moving average led to failures. But getting above the 100-hour moving average still is a barometer that we like to look for. And then the 200-hour moving average, if we get above both those levels, then it should open the door for further upside momentum. We will see, but right now it seems to be a battle above and below the 200-day moving average and the 100-hour moving average on the top side for the euro versus US dollar. Watch those levels. On the downside, watch this swing area between 1.08038 up to 1.0824. Again, going back to the 4-hour chart, that level corresponds with the number of different swing lows and swing highs up going back to the month of November and then into December right here before we return back to that level, that area in trading last week and again this week. Let's take a look at the dollar versus yen next. And this currency pair this week is moving up and down. Although yields are lower in the U.S. again today, the dollar versus yen is moving to the upside here. And looks to test the lower blue line here, which represents the 100-day moving average. I guess that comes in around the 58, 57, 58 level. Above that is the 100-hour moving average at 147.65, and above that is the 200-hour moving average at 147.85. So all in all, this this cluster of moving averages, first defined by the 100-day, 100-hour, and 200-hour moving average, are targets that would need to get to and through on the top side to increase the bullish bias from a technical perspective, one by one by one. If the market does find a willing sellers against this 200-day or 100-day moving average, which it easily could, we would look down toward the lower swing area here between 146.96 and 147.067. That level was defined by swing lows through here and then here. And then we broke below the level here on our way to another swing area down here before, again, retesting the level here. In trading yesterday and today, the market kind of snuffed down toward that level, but it didn't quite get to it, as you can see. So very narrow trading range so far in trading this week, looking for either a break above the 100-hour moving average, 200-hour moving average, or holding resistance here and moving down below this level right here, opening the door for further downside momentum in that direction. So more neutral in between these two technical levels for the dollar versus yen. Finally, let's take a look at the sterling versus US dollar. And here we're looking again at the hourly chart. We do have the Bank of England rate decision on Thursday, so keep that in mind. By the way, we also have the U.S. Fed Reserve interest rate decision tomorrow at 2 p.m. So a couple major central bank decisions ahead. I'm going to put a horizontal line here at this 50% midpoint level. That level corresponds with the move up from this low going back to December to the high price that we saw in December. And honestly, as we all know, the sterling versus US dollar has been mired within a up and down trading range. Yes, we moved above it here on our way to the high, and that things look more bullish. We moved below it right here in trading a couple weeks ago, but that was quickly reversed. Most of the price action is between 126.02 and 127.99. That's about almost 200 pips, but this is an extended period of time going back to before the midpoint of the month of December, so nearly a month and a half of trading. That's not a lot of range. Anyway, the 50% retracement held support in trading yesterday. Again, this is the hourly chart, and it is trying to hold support again today at the 126.63 level. If it's able to hold that level, then look for a rotation back to the upside. We did have the buyers had their shot, admittedly, both here and here in trading yesterday and again today. But each of the signs of price moved above the 100 and 200 hour moving average. What did we do? We failed. So they missed, and that has helped to push the price back to the downside, push the price back to the 50% retracement. We'll see what happens at that level in trading here today. That if you are a buyer in the sterling versus US dollar, this is the level you want to lean against. If you are a seller, you want to see the price move below the 50% retracement and continue its trend to the downside with potential support, probably against these lows right through here, where we had good coming around the 126.47 level, swing lower here, swing lower here. That would be the next target to get to and through before the 61.8% retracement. So there you have it. A look at the three of the major currency pairs to kickstart your trading day for January 30th. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.